We're taking a look at 10 key companies that are reporting earnings on Thursday before the bell. We've got Baba, Kellogg's, Crocs, ConocoPhillips, and Datadog. And after the bell, we've got Square, now known as Block, Twilio, Carvana, Starbulk Shippers, and AMC. Let's jump right into it here with Baba. Now we got that 10-year daily chart up on the screen, and you can see the importance of this mid-80 zone on this chart. From the IPO back in 2014, it acted as support. And then when we broke underneath of this zone in 2015, it acted as resistance. It acted as resistance in 2016 until we finally got the breakout, and we got the breakout, and about 6 months later, you got the back test, and that is held. So this has been a very key price action level going back about 10 years. And here we are once again in 2022, and we've got all of this price action here right around that level. Baba has held on to this zone, and you can clearly see the resistance in just a little bit above that 120 area. Needs to hold 80 for the bull's case to be that this is a long-term level of support that's holding to be valid. And on the upside, we're watching that 120 level. Above 120, that's when we can start to say this chart is repairing itself. Not until then. It's another one of these charts where we're just sitting on that long-term area of support, but haven't gotten that price appreciation yet. Next up, we've got Kellogg's. Kellogg's has had a very solid year. There's a major level on this chart right around that 75 zone, and you can see the importance of that back in 2017 and 2018, and then here again this year. But the reality is, Kellogg's is a market leader in 2022, right? We look at where we're at year to date, we're up about 15%. We're running into those big long-term resistance levels. There are a number of charts in the same space that look very similar to this. The key on this is, can we break out and make that higher high for the year above that 75 and some change? If we do get that, we have a pretty solid chart in play. We've got a little bit of higher lows that are in play here over the last 6 months with that flat top. This to me looks like an ascending triangle pattern. It's one of my favorites if it resolves to the upside. So we're going to watch this very closely. It is a solid looking chart and a name that is very green for the year. Next up, we've got Crocs. Now, long term on this chart, there is a big price action level in at that 44 zone, right? This we can see as major resistance there in the beginning of 2020, right? That's where we fell from. And we get above it at the second half of the year on that breakout, and we have come all the way back down to that major long-term level. It is held, right? Off of the last earnings, this zone is held pretty good, and then we started to make that move back up. Now, the interesting thing with this is we have kind of put this bottom potentially behind us. This 40 to 60 zone that we traded in for the last quarter actually has gotten a break up here over the last few sessions. But if you'll see, the important highs I've just highlighted on the chart, they're still above the current price. While we've gotten out of this potential bottom down here, we still haven't made that major price appreciation. I would say the major level in on this chart you can see is this gap from 2021. It's right in here around this 80 zone. Above that, this chart gets very interesting. This has been one of the stronger bounces off of the bottom here in the market. Certainly going to pay very close attention to what they do in on earnings. Got to hold back up over 60. Has to hold this major long-term 44 zone. Next up, we have ConocoPhillips. ConocoPhillips, I'm going to back this chart up for you guys to see it, right? This is one of those that made a new all-time high in the oil and gas space. We know there's some with that overhead resistance that haven't made those all-time highs yet. This is one that did push out the beginning of this year and make that break to new all-time highs right around that mid-80s zone. And again, as you've heard me talk about it over and over again, resistance and support is not a level, it is a zone, right? It's not like one point on a chart, it's a zone. And it's this entire zone is the resistance level, right? We can see the importance there, we can see the importance here, and we can see the importance back here. And if you notice, we held that 80 zone. So once we get this breakout, we held the top end of it, pushed. Oil stocks came down over the last month or so. Right in at this 80 is that big major level that we want to see hold. And I'm going to zoom in so you can see this portion of the chart better. There's some resistance that takes place right in here around that 98 zone. A move above that would bode very well. There's really not a whole lot until we get back up towards those highs. So 80 in on the downside, right around that 100 in on the upside. That's what we're watching there. Next up, we got Datadog. This is another one of these charts that is sitting on long-term key level of support. You'll notice here, the chart goes back to 2019. You have a lot of support in this zone in 2020 and 2021, right, holding above that 70 to 80 level, and we did it here over the last couple of months as well. There's another very clear level that's in on this chart, and I'll go ahead and throw it up there. And that's the top end of this zone, right? And we're looking right around that 120 zone, right? Resistance, resistance. We get a gap above it in 2021, and that's where we go from. We test it, we bounce. We test it, we bounce. We test it a third time in a short period, and we break below, right? So we're really watching this 120. If you get back up over this 120 zone, this chart starts to look repaired. If it stays inside this range, 80's in on the bottom, and we know we see a lot of these charts like this where we stopped falling, but we haven't appreciated. So we're going to watch this one pretty closely on earnings there. All right, after the bell, we have Square, which now known as Block. It is opening up this morning at about 83. I'm filming this before the bell in on Wednesday because PayPal's earnings were pretty solid. They do kind of trade in lockstep for the most part. The major level in on this chart's right around this 100, and again, it's a zone. It's not, a number. It's 90 to 100 is the major zone that we're watching. 2018, the importance. 2020, the importance. And again, this year, right? We have started to make that curl up here, but we have not broken back above this. On the upside, we're watching this 90 to 100 zone. And then on the downside, this has got to hold this 60 level. And I'll put the line in on the chart. It's really like this. You can clearly see from the price action going all the way back to 2017, this zone, 2018. 50 to 60 is that must-hold area on the long term on this chart. Next up, we have Twilio. Twilio, another one of these. It's sitting down on major long-term area of support. I'm going to extend this actually out to the left, and you can see the importance of this going all the way back to 2016. Right? It's very rare that we have so many stocks that look the same in terms of holding on a major long-term support level. But all of these that we've been doing here over the last couple of weeks, the major theme from that is stocks have fallen into major long-term support, and they're testing it from above in most cases. We have not gotten the turnaround to the upside yet, but we are certainly watching for these things to turn around because the potential is there, right? This, you can see 100. 100 is the level we need to get back up on. But this major level, and this is another one of these where the gap is actually a major level. The gap from 2020, right here at 120, support breaks down and stayed below it. Get back up over this zone and we can start to call this chart more repaired. Stay underneath of that zone. It's got to hold this 80-ish support area where this chart starts to look poor to the downside. Next up, we've got Carvana. Carvana, you can see here's the major level going all the way back to 2017, right? And it's right around this 20 zone. That's where we get the breakout from. That's where we get the test in 2020. And here we are right back in at this zone. This is an incredible fall from almost $400 to $20 a share over the last year. It has held this 20 zone the last three tests, and then on the upside you have about this 35 level, and that's about where you're testing right now. There's not a lot of price action on this chart really between this 35 and 90 zone because this is pretty much just a straight fall down. I'm going to zoom in so you can see this area a little bit more clearly, right? It is pretty open between these two levels. We're going to watch to see if we can get up over those late May highs in the mid 40s to start making some repairs to this chart. 20 is going to be that key level in on the downside. If it breaks below that, this chart really doesn't have really anything left until about $8 in terms of support. Next up, we'll take a look at Starbulk. This chart looks really good. When we look at it here on 5 years, we back this up. A lot of these shipping stocks have a ton of this overhead resistance from back, a decade and a little bit past 2009. This area of the market, they built too many ships because things were working so well. The economy slowed down. Rates for shipping completely fell apart, and a lot of shippers actually didn't make it. There's been a lot of bankruptcies in the space. But after a long period of time of working through those issues, getting the right number of shifts versus the right cost to hire them. A lot of these shippers have turned around here over the last year or two, and so I really just kind of want to pay more close attention to the last 5 or 6 years on a chart like this, because it tells a different story than when you back the chart up too far, right? They just took a long time to get back to it from the 08-09 recession. We have put in a series of higher lows here since the 2021. And that breakout there of 7-year breakout ended about 14. So you can continue to see those higher lows getting put in. There's an important level that's right here on the chart. It's kind of this entire zone right here. It acted as resistance in 2021. That's where we got the breakout at the beginning of this year. It held for a while until we get that breakdown here over the last month or so. So we want to see this get back up over 28 to push towards those highs. Major level of support there in at 21. Really interested again to see what they have to say in terms of forward guidance, because this is a good gauge of overall economic activity. If they've got high bookings, costs are up, that means goods are flowing across the world, right? So we definitely want to pay attention there. AMC, I know a lot of you guys like to watch this, and GameStop, which is the reason why I'm taking a look at this chart. There is a level of support there in at that 9 zone. The resistance on this chart really is right around 20, and again, it's a zone, it's not a number, right? And that's that big gap up from 2021. It fell down, and then we got up above that zone, and it's acted as an important kind of level, right? You got a little bit of a failure here, pushes back down, and then when it breaks above that zone, you get that continued push. So the key levels to watch on this chart: 10 on the downside, 18 and 20 in on the upside. If it gets above that, you're looking at that 32 zone. I'm going to leave my comments on this company just solely based on the technicals for this. We will see you guys tomorrow with Friday's earnings and a kind of wrap up of the overall week. Hope you guys found this information useful. You have yourselves a fantastic day. I will see you later. Take care.